Hello, good morning. Today we try to see what are dividend stocks. Okay, dividend stocks. Some of the investors. This is dividend stocks are related to investing, not to trading. So dividend stocks are related to what is investing. Okay, investing, what does it mean? It means when you buy these stocks, you will stay for long. That's why we say to go for long, to stay long, for years. Okay, so you invest for long. Now, but those stocks, you are not interested in what we call capital gain. Not interested in capital gain. So I will explain what does it mean capital gain. Now, what is the thing that why the people buy what we call dividend stocks? They buy dividend stocks because they are interested in what we call the dividend. Interested in dividend. Dividend, what is it? It's, let us make it clear here. Okay, so we have a company. Okay, a company, and it has earnings. Okay, it has earnings. Now, for example, this is their earnings. Now, they take part of the earnings, like this, part of it, and they give it to the people who buy these stocks, which are called shareholders. Shareholders. Okay? Since if you buy this stock, dividend stock, you buy this stock, it means as if you own part of the company. You own part of the company. Okay? And since you own part of the company, you are allowed to take some profits. Now, this profits is called dividend. Okay. Now, you take any stock, okay? And when you go to the summary, of the stock, you find on one part of the information, you will find what you call, it's called written like this, div, and you find yield, like this. Div or yield. Now, div is short for dividend. They give you how much cents or dollars. For example, I will give you just an example. A stock is $100 a share, and it gives, for example, $5 a year. Okay, $5 a year. Generally, they give quarterly. They divide this on 4, and they give it like quarterly. When you see the summary of any stock, you will find that most of the stocks are quarterly. It means each quarter, you see 3 months, they give you part of this $5. Okay. Now, the yield is just a percentage of the stock. Okay? So $5 out of 100 is 5%. So we say that the yield, you find it like this. Dividend and yield, you find it like this. You find it $5 and you find 5%. Okay? It means 5% of the 100 is $5. And they give you $5 a year. Okay? Now, why people buy these dividend stocks? They buy them because of the dividend. It's like an income. Okay? It is what we call an income. They are not interested of the stocks if it goes up or goes down. What interests them is the income. Most of the people who buy these dividend stocks are, if you have a large amount of money and you buy these stocks, so each month you have like an income, you have like a salary, or you have like an income for you. Most of the people, most of the retired people do this. Most of the retired people, why retired people? Because if they have saved a lot of money through their savings, okay, retired people, through their savings, like 401k, or any other saving account, so they have a lot of money, so, and they need money like an income for each 3 months or each month. Some stocks they give each month, not each 3 months, like quarterly. Some they give each month, monthly. Okay? So those people, the retired people, they use their savings in order to generate an income. Okay? But most of the time, you need a lot of time to do such dividend stock. Okay, suppose I'm giving just an example for those. I see a lot of people, they try to look for these dividend stocks and to specialize in them. Okay, if you have $10,000, this is your money, all your money you have, and you buy a stock, okay, that gives you, for example, 5%, okay, 5% from 10,000 is $500, okay, $500, but you should wait the whole year, from this 10,000 to get this dividend, which is $500. Okay, so $500 a year. I don't think that you are looking for this kind of stocks, dividend stocks. In terms of profit, 5% of this money the whole year is not what other people. But if you have hundreds of thousands or millions of dollars, you will have a better income from this, and you will be happy with this. But like 500 out of 10,000, I think, in my opinion, is just a little bit from dividend stocks. Now there is another problem with these dividend stocks. Okay, let's say the stock was $100 when you buy it. Now after 1 year, it goes to $80. Okay, since you are not looking for capital gain, it goes up. So suppose that this stock that you buy, and it's a good company, but it goes down, but the stock goes down. So from 100 to 80. Okay, you lose $20 for each share. You know what does it mean, $20 for each share? You know that it is 20%. 90% of your money is gone. And if you have a dividend with 5%, so you lose what? You lose 15% of your money. And maybe someone tells me, okay, from 100 it goes to 80, next year it goes to, for example, 120. I ask you the question, how do you know? How do you know that this, from 80 it goes to 20? Maybe it goes to 60 or to 70. So you lose more money. So that's why dividend stocks is a risky investing. Okay? It's a risky investing. So try always to look at the price and to see if you lose your capital. Okay? Try to see your money. If you are losing your money and you get 5% like dividend, it doesn't go. If the stock stays in a range like this, for example, if it stays, you see that always like 100, it goes to 80, it goes to 100, 80, 100. So if it stays in the range, you can stay with the stock because it works in a range. But if one day it goes below 80, this is the big danger. This is the big danger, because when it goes, this is the range, it goes down the range, it means there is a problem with the company, and the price will go down and down and down, and you don't know where it goes. So you will lose a lot of your money. It means your investment money, and you will lose what you get. If you get 5% and you lose 20%, so it's a big thing. Now, what I suggest for these dividend stocks is you look for stocks that are having a range. For example, let's say 180, like it goes like this, and then it goes to 80, it goes to 100, it goes to 80, it goes to 100. This is just an example. Your stock, before you buy it, and you see that the stock is going always into a range. Now what you do, for me, if I want to buy this dividend stocks, which I don't buy dividend stocks, what I should do, if it passes the resistance and it goes more than 100, for example 101 or $102, it means that the company has something new in the company, or new management, or a new product, or the earnings are better. Now I buy it here. I buy it when it passes the resistance. Now why I buy it in resistance? Because I'm looking for two things. I'm looking for capital gain. I'm looking for capital gain, which is, what is capital gain? It means if I buy it 1, 2, and it goes to 110 or 120 or 130 in a year, it means I'm having this, the capital gain, and second, I'm having the dividend. So I'm having two profits, two kinds of profits. One, capital gain. Okay, capital gain. For example, let's say from 102 it goes 110. So I will have $8 a share as a capital gain, which is very good. This is the thing. From 112 to 110, it's $8 profit. This is capital gain. And for example, if I have the dividend, which is 5%, okay, which is $5 for each share. So here I have an income and I have a capital gain. This is what I'm looking for. And if you follow my strategy, you should do the same. Don't look only for dividend. Don't follow these people that they tell you, okay, just buy the dividend stock, and don't look at the capital gain. They are wrong. They are wrong, because if you get only dividend and your stock is going down, you will lose a lot of money. If you lose your capital, there is no need to have the dividend. What's the use of dividend if you are losing your capital? Okay, so in trading in general, this is the basics of trading. Is like Warren Buffett says. See what Warren Buffett says. Okay, he is an investor, invests for all his life. Okay, what did he say? He said the basics of investing or trading or something: don't lose money. Do not lose money. It doesn't here. Do not lose money. It doesn't mean that you don't have losing trades. No, you have losing trades always. But the problem is that when you see a trade is going down, you should cut it short. You shouldn't let the stock go down, and you think that it goes up. And the second advice, or second rule, this is the first rule: do not lose money. The second rule is do not forget about the first rule, which is this: do not lose money. And the second one, do not forget about the first rule. This is, don't forget about this, because all the investing in general, and versus trading in general, is to make money. This is your only goal when you go to the stock market, is to make money. If you are losing always money for years, you should stop and change your strategy or change the things. Don't stay the whole life losing your money always without making a profit, because you are in business. When you are in business, you make money. So you can lose some trades, but you have to win other trades in order to make money. Okay? So this is in general about dividend stocks. They are very good if they have capital gain. So you should have two things. Now, some dividend stocks, they give little yield, like the yield. Well, we say the yield is just percentage. Some they give 1%. Some they give more, until 10%. But some stocks give more than 20, for example 25%. Now look at this. This is very, very attractive yield, 25%. It's too much money. But the problem is that in this 25%, most of these stocks of this company are having problems. It means that this company give more dividend, they give you more money, not because they are making money, but because they see that a lot of people have sold the stock. So most of this 25%, you find the stock like this. The stock is going like this. You find it here is 20, now it is $5. Just an example, okay? 20, and now it is $5. This is the stock. It's going always down for 1 year or 2 or 3. So this company are losing money, and the traders and the investors, they are quitting this stock, this company, they are selling. So don't buy this stock wherever they give you. Wherever they give you, don't buy these stocks. Now for me, if I want to buy a stock with dividend, it looks like this. Okay? it's a stock that each year, for example, it begins with 20, next year is 30, next year is 35, the other year is 40, 50, 55. This is stock that I like to buy. It means the stock, you told me, how do you know? Okay, you buy from here, 20, you put a line. If it's going up, you stay. If it goes down, you sell. Is that simple? Yes, it is simple. It goes up, you stay in the stock because you are making more money. But if the stock goes down, you just sell. Don't stay in this stock wherever they told you. Wherever they told you that the company is good, it has good earnings, it has whatever. But the stock from 20 is going to $5, and someone wants to argue with you and he says the company is good. So if it is good, why it comes from 20 to 5? It means all the traders are wrong? No, they are not wrong. When they see some traders or mutual funds, when they see that the company has a problem, they quit. That's why you see the company losing money. Okay? So please, if you have a question about dividend stocks and you want to understand more, either you can comment below this video, or you can send me an email. The email is in the website. Go to my website to find the email. And if you have a question or comment or something, just ask questions and I will respond in due time. Thank you very much for watching.